What's going on, traders? Hope everybody's having a great weekend. Wanted to do some analysis on the S&P 500, the Spider ETF. Before we get into it, of course, this video is for educational and entertainment purposes only, and in no way should be viewed as financial advice. All right, so with that being said, let's get first off into our economic calendar for next week, see what we want to have on our radar. So we're going to pull that up here now. And Monday looks pretty quiet. We do have a Fed President Harker speaking two times at 10:30, and then when the market is closed at 4:30. On Tuesday, we will be watching out. We do have Bowman speaking at 10:30, and then Barkin at 10:45. And Kashkari at 10:30. So a lot of speakers all at the same time on a Tuesday. We'll keep an eye on U.S. retail sales as well at 8:30 before the market opens. Wednesday on the 18th, we have Waller speaking at 12 o'clock lunchtime, and right at 12:30 we have New York Fed President John Williams speaking. At 2 o'clock, we do have a beige book. And then looks like we have another Fed speaker, but it is when the market's closed right around 7 o'clock. So that is not a problem. So it looks like tons of Fed speakers this week, making it very interesting. Thursday, the 19th, we do have initial jobless claims at 8:30, so definitely we'll be watching that as well. Existing home sales there at 10, and oh gosh, look at this. We do have at 12 o'clock, Fed Powell is speaking, and then at 1:20 we have Goolsby, then we have Vice Chair Barr, and then we have Bostic at 4. And I guess looks like Lori Logan when the market is closed. So tons of speakers to watch out for. And then it looks like on Friday the 20th, we do have Mesker speaking at 12:15. So we're going to run through the gauntlet of Fed speakers this week, but really not too much as far as the economic data is concerned. So that is nice. Certainly we'll be keeping an eye on initial jobless claims, as I mentioned before, on Thursday at 8:30. All right, so other big thing that we want to go over before we really get into some charts is, of course, we do have earnings season really starting to kick off. We do have Bank of America on a Tuesday before the market opens, but really everybody's going to be watching Netflix and Tesla kick off on Wednesday after the bell. So I'm pretty sure that's really going to be things that could potentially move the market, considering their high beta. All right, so with all that out of the way, let's get into some charts here. We're going to start off with the weekly, and not the most constructive candle being put in here. Yes, we did close the week green with a green candle. However, you can see here we just came up, back tested the 9 and 20 from this perspective, and kind of looking a little bit like a potential H type of pattern, going to potentially setting up. Now we have been talking bigger picture. We are looking at this 415 and that 410, those POCs, which we've already kind of been over as a potential downside target. Luckily, though, we were ready for this kind of snapback. We did make a nice counter trend rally up, which we were kind of expecting. And so a nice move. We kind of filled the gap, but really we're unable to show any continuation for the weekly higher low. So really what, from a candlestick perspective, you can see here, obviously we tried to push up. You can see the sellers came in indicating from this wick, pushing price back down lower, not accepting price up in this range. And but from the candlestick perspective, we really just put in a daily. We didn't get up to the weekly lower high, but we put in a daily lower high, which we'll go over here in a moment. So that's pretty much what we got from this trend line perspective viewpoint, as we have when we've been watching, of course. And now we have our lower low. So Now we shall see what the next step will ultimately be. We did close. Well, I mean it's just below these August 15th highs here. Um, but it's not really convincing. So I'm gonna definitely keep an eye on this area, basically 432, we'll call it, to see whether we are over or under. Also, kind of for some a little bit of guidance from this bigger picture perspective. But that being said, um, we've made our lower low, right? We've made now the next sequence. So we would think the next logical perspective would be if we, I mean, it depends. We could still, certainly, we want to look at all situations. We still could make a weekly higher low. That is still on the table as a potentiality. And again, that would be coming back and back testing this double inside bar breakdown, right? But if they just hold it, if we just hold it to the daily lower high, then we would really be looking for a new lower low to be made probably into that 415. Maybe they make it all the way down to the 410 like we've been talking about. I'm not 100% sure. We'll take it day by day. But that would be the next spot, in my opinion, to then make a new lower low in the sequence. And then we can start to talk about potentially putting in another higher low before ultimately making that move into the 410. So that is kind of a loose bias there, or a loose game plan for the Bears, and just what the trend sequence would indicate to us, right? But of course, anything can happen. Of course, we will look on that bullish side as well in a moment. We'll come over now and flip to the daily chart and see what we can take away from that viewpoint. All right, so here on the daily, of course, kind of giving us a little bit of a different story. Now we did actually end up closing. Excuse me. We did end up closing. Let me actually just get a sip of water here. All right. We did end up closing below the daily 9 EMA, but final print 431.50. Right now it is sitting at 431.20 or 431.60, 62 area. So it's not really a convincing close to me. As far as being under that. But really now we've kind of printed, I mean, more or less, we still are in a range, right? We're not, let me flip out of this here. Let me go to this. Take this off. We're looking for acceptance. Obviously we had this huge rally up, to the upside. Now we're seeing a little bit of a curl, and what I also want to watch out for is potentially kind of a rounded top type of situation here, where we might print another candle in the upward direction and then break down. But the main thing that I really want to point out, and where did we close? Well, it's not 100% convincing, but we were trading in this range here, and it looks to me, that's going to drive me crazy, sorry. It looks to me like we have, in fact, broken out of it. But I want to see what happens Monday and Tuesday. This is really going to be important to see whether or not they actually close another daily candle underneath this range, because you can see here we were looking for acceptance, and then it looks like we did or to break out of it. They did fight back here. You can see the buying pressure coming in just a little bit, trying to push us back up. So this could be a fake break of this consolidation, this balance range. So Monday will be interesting to see if the bulls have any juice to push us back up and close us back up in here, and in which case we'll look for that kind of range consolidation type of price action as we look for acceptance in this new area. And whether or not we can or not, will be another question. But if we do hold up, it could be a opportunity or a case for a potential daily bull flag. push us up. The thing for me that wasn't too, concerning, we got into the half gap of our of the half point of the gap that and we were talking about that in one of our previous videos. I was kind of saying, well, once we get over this 436, maybe we can fill the gap up to basically, 438, 60, 50, maybe a 439 touch. But we never were, and I was saying maybe we don't actually even have the strength to get up there. And unfortunately for the Bulls, it looks like that kind of was true. We tried to fill it. We only got halfway and then started to see some offers come in and push us down lower. So the other thing, though, that I want to mention, with the, when we're seeing these balance zones, is that a lot of times in this type of chop, and this can be for intraday too, you see price action too that can give a lot of those false breakouts, right? Come up there, you come back here, come back down. They'll trap the shorts. Then we'll come back up. Then we'll come back down. Then right. So you'll see a lot of these type of moves that break outside of the structure. And then come back in. Now, is this one of those situations? Maybe. It would have been nice to see at least probably a close over that daily 9. Would have been a little bit more encouraging. But we'll have to see how this looks from a daily perspective again after Monday, and we'll see if they actually are able to put in some type of candle that holds back inside this balance range, and that in fact would show us that this could be a fake break of this structure. So again, I'm not 100% sure. The other thing that we were really watching, though, was this high on the 29th, right? And pretty much that's where we close. This is, for me, where they're really going to have to hold on to. If they start to break, and we'll just throw out, a level here, and of course nothing's going to be to the penny. So, 431.50 area, really wouldn't want it too much lower than, this, I would say, the top of this candle. So, if that really starts giving up, and that pretty much lines us up 430, this is at 429.88, but 430 getting under that, and likely to probably see that selling come back in. And I wouldn't be so surprised. This is the next area that broke a structure here, and you can see what happened after they broke. We were trading in this little range right here. Couldn't get out of it. Couldn't get out of it. And then finally, once we did, that gave us this nice move to the upside. But coming back, if we start to break this, it would not surprise me to come back and come into the 425, 45 area, 50, maybe even that 425, and retest this previous structure that had been broken. That would just make, that's just kind of logical for me. And the other thing that we were talking about was the weak structure in these daily candles here. The thin structure. If we start to get a bit under here, it's going to be easy to fill in this candle again to the downside, in my opinion. And to work out this this structure, price would have to trade, and we have to have more volume traded in this area. And unfortunately, with the thing that I developed, you can't see it. I wonder if it will show us on this one. Probably not. I'll just throw it up really quickly. Let's see if we can. I wish we could show it on the daily. But it's not. It won't let me. You can see the lack of volume down in this area from Friday's rally on this profile, right on this 4-hour chart. Like I said, I wish you could see it on the daily, but you can see, and we're kind of making that, I'm trying to think, oh, here we go, a P type of structure here, right, on the market profile. But look how thin this is. Not too much being traded up in this area. Okay, be very easy once we get some bids under there to come down. So the other thing that I don't like is that we And I guess we'll go over this on some other charts actually, so I'll wait. Let's flip back. Okay, let's go back to our daily really quickly, and I think that's pretty much everything I wanted to go over from just this candlestick perspective. So why don't we move on now and start to look at some other charts. All right, what can we take away from? Let's look at some daily chart. I gotta update this, but this is fine. Dun, dun, dun. I did want to look at our fibs. Okay, cool. Yes, this is also interesting here from our fib view. We are still holding on to the 50%, right around that 431.50. We already kind of talking about that area just a moment ago. But the other thing that strikes me here, and I just have to extend this, is that we did break out of this channel here. And the other thing is now we could see, we could potentially see some choppy price action here, but let's see if we, coming up and back testing this trend and looking for that move down could be a nice opportunity. If we come up into the 435s, again, depending on, obviously what day we get there, but back testing this channel, we may be looking at some monthly, well, I guess maybe November swing puts. That could be a trade, the 430s or 425s potentially coming up here, hitting those 425s and looking for moves back into that prior structure like we were just talking about right here in this 425 area, which lines up with the 61.8. And that's going to be, after, if they actually do break under the 431, 45, we'll call it, and certainly under the 430, and you start closing under there from this, bigger picture perspective, the natural place is going to be to trade into, statistically, you're going to trade into the 618 from there. Now, don't get scared. We break under, right? Or even if you miss this trade, you could just wait for this back test 431.50, and then you get your move there, right? So it could offer a couple of different scenarios. You might want to wait for something like that because then you've actually broken below the 50, a little bit more confirmation of this structure break, because you don't know, again, if you're just going to get stuck here. And another scenario, just trade like this. And then you're going to get burned, right? So, that's one way to look at it, but you could also wait for a little more confirmation, something like that as well. If we start trading, though, back up above, recapture the 50, recapture here, we'll probably look to come back and retest these equal highs again. Can they actually fill the gap completely? I don't know. They tried multiple times, unable to. And we want to watch out for also potential. If we just hang out, there's a chance we just still look for that price acceptance like we were talking about earlier, and maybe start to either find a flag or distribute, and then make a move one way or the other. All right, so let's move on from this. Same song and dance here. We had come down, test bit, basically, no coincidence here where we bounced off basically this 430 at the end of the day. You can see right where we stopped, right at our 437. We had that level marked off. Nothing really more to go over on this one. Let's just watch 430 area, because under that, like I said, we're likely to get those trades coming back down 437 and that 425 area. So, but nothing more to kind of, if we start to get back over 435, 434, 75, 435 I like better, then we'll look for those trades back up into 437 here from this viewpoint. And then if we can get over, maybe we can go for the gap fill. Maybe. More than likely that would be the next target, but who knows? So much stuff going on, unfortunately. Okay, I think that's all I've got. Let's go on to some other charts before we get into some of our levels for our daily plan where we may want to engage the market on Monday and manage our risk. But let's look at some other charts, see what, oh gosh, now the very interesting things going on in VIX right now. The main thing that I thought was interesting was the fact that VIX up, at one point it was up 17%. And the markets were only, SPY was down 0.5%. So somebody's lying there, right? Very interesting move in volatility considering the lack of downside move. You would think that VIX being down up 15%, 17%, that we would have seen SPY up down, 1.5%, $5, but we were only down about $2. So very interesting there. We did again try to break above that 20 area, unable to do so once again. But we are still trading over 19, so be very cautious. Remember that also these expanded volatility is expanded range in the market, so make sure you are sized properly to handle that volatility. It's not like how we were trading, during the summer, obviously, with VIX down by 14, under 15. Market's not going to move quite as much, and if you're oversized in a market with high volatility, you can have your positions go against you very quickly. So you want to make sure that you are properly sized to handle that volatility when it is present in the market. But very interesting though, like I was saying with VIX and SPY and the move kind of being a little disconnected, but everything's still bullish. You can see really where we sold down into, right into the 1570s. We had this level marked off, and we still said still bearish if we stay basically under that over the 1570 area, and certainly over 15 as well. So basically it's 17 points or 17 cents or 70 cents or so range there. But yeah, a strong candle. I don't really think I have anything more to go over. Let's see if they can hold over 19, and certainly ideally for the bears they want to hold 18. But if you were looking for a capitulation move, we want to see a move outside of this, and then we can work it all out, get it all out of the system, and then we can go back up, right? But we're not quite there yet. All right, let's take a look at VIX futures here. They were selling off, getting really crushed, and then big spike here, still in contango. I mean, over the zero line is really where things start to really get interesting. Seeing that slight tick up in the 9 versus monthly here, above zero, so not super strong. This was a little interesting. It's lagging here, but the big thing, the volatility of VVIX over our 103 105 level. Not, we did see obviously some pulling here, but this being over that 103 105, want to pay attention to that. If this holds over that 103 105 area, I would expect volatility to only increase in the markets, and so then it really can set us up for again that potential capitulation move, but sharp move up, at least in the futures and in the VVIX here. So keep an eye on if we still continue to trade over that 103, 105 area. That would suggest that more volatility is in store for the markets. If we start to come under, then we, maybe we would see a little bit more of that consolidation bull flag scenario that we were talking about on the daily chart on SPY. But let's see, this isn't convincing 100% for me. Just like I said, that trend breakout, or excuse me, that consolidation range breakout wasn't 100% convincing for me on SPY to the downside. So let's see on Monday really where we close, and if we do close back above another daily candle, that would bode good for the bears in my opinion. And let's see again if this 920 or this 9-day versus monthly actually starts to get over the zero line again. And then we'll see probably about more potential volatility coming into the markets. So that's all I've got for VIX. Let's let's take a look at some of our market internals here. And what can we take away from that? We did open positive on Friday. We were looking pretty strong, up in the 1000s. You know, we weren't completely maxed out like on Tuesday when we had a great trend day all the way up to almost to the 2000, and then we did start to cool down with help from the bond auction, but after that, it was just a slow cool down all day, and we ended up below the zero line and just kind of hung out really at the end of the day. Nothing too much went on, but and you can see here on the VLD just basically below the zero. I think that this really was the indicator, kind of showing us that the market didn't have that much strength on Friday, just barely opening above the zero line and just kind of puttering around. I mean, we ideally the bulls would have wanted to see, I mean, at least, you know, up here and, you know, for any type of move, but they just were unable to. Markets inflows basically flat, showing not a lot of participation overall. But let's just let's take a look at how the week kind of looked. So yeah, I mean, basically just kind of flat, but these days obviously we're getting slammed down, and that was on Thursday. So I think this kind of speaks to those up and down, this, you know, kind of, well, without a doubt, with this volatility that we've been seeing, right? Big outflows one day, big inflows, big outflows. And now we're just looking for acceptance, and you can kind of just see that with the non-committal views here on the internals. All right, so, and actually let me, well, I'll do it later. Hopefully I remember. All right, let's take a look at the dollar and see what's going on in dollar land right now. And we'll pull that up. Okay. All right, I can't wait till they fix these candles, but all right, so what's going on here? Yeah, we did break the trend just ever so slightly for a little bit, but what do we say? And I'm going to take this off for now. But what do we say? This could pull all the way into the 105 area and still just technically be making a lower high, a higher low in the sequence. And we kind of drew that out in our last video, right? We have impulse, pull in, impulse, pull in, impulse, pull in, impulse. Finally needed to take a break, look for acceptance, and then we took off again. Yeah, okay, we had a little pull in here, but nothing really. Pull in right into our half gap at 407.30, and then pull back in, impulse again. So we were talking about that it could just pull into this area, the 106, for just another lower high, and continue the sequence, and that's what we are getting, and it's coming right back up into that 106.85, 90, 107 area. It will be very interesting to see how price reacts when we come into this zone once again. Do we see a move back to the downside, or do we keep chugging along? And if we do start to get over, and then we will look for price to potentially move into the equal highs back at that 107.30 area. And if we get over that, then we'll be looking for this next target. Maybe from here, you know, we hang out and maybe do a little bit of acceptance after we broke out of this high, you know, something like this again, and then make our next move potentially into the 107.75, 108 area, and that would be a good for the bears and bear for the bulls. So let's watch out to see what type of scenario we get here. Maybe these are two potential paths that we could take. So everything's still looking bullish as far as the dollar is concerned, which bodes negatively for equities, obviously. So, all right, let's take a look at TNX now. Another thing that everybody should be keeping an eye on. Oh, I forgot, it's not like that. 10-year. Here we are. Okay, and what can we take away from this perspective? Still, same type of situation, right? As we already went over with the dollar. Impulse, down, consolidation, impulse, whoops. Impulse, pull in, impulse. Okay. And consolidation here. Big push now, right? So we swept our high, and now we have another lower high in the sequence and pulling back up. Kind of trapped in a rock and a hard place. I wouldn't be surprised to see rates kind of go sideways for a little bit here. You know, they were down almost 2%, about one. They were down about 83 cents on Friday, but we are stuck here between the 9 and the 20. So let's see if they end up just going sideways for a little bit and have us trade like this. That's a possibility. But as it stands, nothing's really broken about the trends sequence from the bullish perspective. So we're just chugging along, and we shall see kind of very similar situation to the dollar. If we do pull back up into these equal highs right around that 47 area, what are we going to get there? Do we get, do we get a pull here and then a pull back down, or do we just continue and keep on marching right along? That is the question. But if we do get back over 47 area, again, at about $1, I would look for another into these next equal highs. So that's what we will see. There is, of course, also the chance that if we do break over, that we just hang out for a while and then finally make that move to this target right here. And what happens there, I don't know, but you know, maybe we come back up to this blow off. I'm not sure, but as things stand, nothing really looks too bearish here. Maybe more a little bit of a bullish to neutral, but we'll have to see kind of what happens, because right now, you know, as far as we're concerned, we're trading in something like this, you know. So watch out for this type of situation, right? Maybe you can make a case for a little bit of a bear flag there potentially. So I don't know, but either way, overall bullish to neutral is my stance here on the 10-year. And until, I mean, they just really gotta break it down quite a bit for this to be bearish, but nothing really says it to me at the moment. All right, I think we went over everything that I was looking to recap so far. Let's just take a quick look at our oil. You know, with everything going on and with the geopolitical mess, you know, this has been on a forefront, and of course, usually higher oil is you know, with inflation, goes along with inflation, and usually puts pressures on the market overall, generally speaking, and a lot of up and down here, price action, a lot of gaps. Gapped up quite again right into our main level here at this 90, and that's exactly where we stopped at these equal highs right here at the top of the supply area. So we shall see kind of how this one's going to go. Nothing really looks bearish, but you know, again, this one looks bullish to neutral, just in the sense that I think it's possible, and you know, anything could happen. We get more news out from the Middle East, but let's watch to see if we kind of do something like that and maybe end up setting up in a flag situation as well, and consolidate and see if we can get price acceptance up here. And if they can and they do break out of 90, going to be looking pretty much at 90.85 area. And then if we get over there, we're looking for 91.25, 91.50, 60 area back up into this next level. So we shall see. I don't know, we could trade up into here and then get rejected and then consolidate, or we could just bust right through and come right here. So or we could come in, fake break above, and then just crash back down to here. So those are 3 paths that we could take, or 4, I guess. Consolidation, rip up, bounce, rip up to the high here, fake break below. So 3 or 4 situations for you on oil, but we want to keep an eye on it because strong oil here, XLE running usually is negative for the markets as well. But I'll throw this kind of in our bullish to bullish neutral stance from as it stands right now on the chart. Got to expand these things. I'll do it later. All right, let's get into some stuff we are looking at. I always do the video and then I think of something else I wanted to go over and that I had forgotten. All right. All right, so let's look at some fibs from the day trading perspective and see what we can take away from that. Okay. All right. So from this perspective, this was the main thing we really wanted to hold on to. This 432 basically here, the 50% retracement, unable to hold on to. And if we look at this from a balance perspective, right? We are basically trading here to here, and this is what we kind of went over on the daily chart a bit earlier. We were trading in this balance zone, right? And then what happened? We have broken out of that structure here. At least, like I said, it's a little we're unsure what the daily is going to close on Monday like, but from this 4-hour perspective, you can really see a lot more clear how we have broken this structure. So now they were bulls, and the market was not willing to accept price up at these levels. We have broken down now. So am I going to chase this whole short? No, of course not. What we would want to wait for is a back test of that 432, 40, 50 area, anywhere in that kind of zone. If we really start closing, it closes back over the 50, I probably would be out of that short, but got to give it a little leeway here, 20 or 30 cents above this 50%, because you don't know obviously if it's going to just fail back under. But if you get really as long as we don't really close over, we're looking for a move back up, back test the structure, and we'll be looking for moves back down into basically the Friday high area here, the opening price of that high at 429.50, 45 area. We start to break that. Look out below. Again, we've already alluded to this thin structure on Friday that was created, and we would potentially see moves back down into the 426 to 426.50, 60 area right here on this 4-hour POC. Maybe we get a move down to the 23.6 around that 426 even area, but that would be my next potential target. And it's also going to kind of be coming into the highs here of this prior bout, right? So, I mean, we're almost even seeing right now the Wyckoff scenario, which we've been over before on my Twitter. What do we have here? And we're basically using the fibs right here. What is this? Accumulation. Oh snap, I deleted everything by accident. All right, it's fine. What did we have here? Consolidation, right? Then what do we get? Markup, retrace down, markup 2. Now what do we have here? Distribution. I'm going to throw a. What do we have here? Distribution. Now we have our markdown. Very ugly, very ugly. I hope you guys can see what I'm talking about, but I should just have it without the fibs on. But it's good from this perspective that at least everyone can see that it happens on the daily. It happens on all the different time frames. You can see this. So from the Wyckoff cycle, what's the next move? You're going to have in this up case, it went down, right? So what are you going to get? A move up, and then the markdown continuation. So you're seeing it right here, okay? And so that's what I would be waiting for a potential short trade. And if I was to take that, I probably would either hit the 432s or the 430s from that. Just right at the money. Or if you're, if you want to be more adventurous, the 430s could work. But we may find a bid there at the at this area. So that's still a nice trade though. So that's definitely an area in that 429.50, 45 that you would want to be looking to start taking some profits for sure, because you don't know if it's going to break. But if it does, then we'll be looking for those lower prices down into here. What do the bulls want to see? They want to see, from the fib perspective, they want to recapture that 432, 432.35, then try to make a run for these nines. Really got to recapture these nines, get over 433, 9 and 20. Trying to cross over here on the 4-hour. We start getting over that 433 area, then we'll look for prices to come back up. We got to get back over that whole number, though, of course, 434, and that will probably lead us back up into the 618 around that 435 zone. But we were talking earlier about that 435, another area where technically from this 4-hour perspective, it is just a higher, a lower high being put in, and you could potentially look for another short trade in that area as well. Price comes back up here and then comes back down. So keep in mind for that idea too. So even if we opened up above 432, you could take a trade on the 435s or the 432 calls, come up here into the 435, and then look to flip short and look for that move. Or we could obviously, if we don't, we look for the short onto there, like that. But there's two ways you can play a long and a short there. But again, I really wouldn't hit any longs. I mean, I would wait and maybe try a long here. If this just sells down, look for a long to here. And then that short that we already kind of just went over. Maybe we bounce here, I don't know, or maybe we come through. So yeah, that's all I got from the fib perspective. Let's see. I think that's all I got. Ideally, over the 435. We'll look to see if we can trade anywhere into try to get into that gap again. Remember, the gap on the daily starts at 436 and it runs to 439, 438, 60, 439, 75, anywhere in that area. 430, so 438, 75. Yeah. All right. So let's go into some balance zones, and then we will finish it up for the day and get on with our weekend. Rainy here. Hope the weather is nice where you are. It is not a nice day out today. Okay. So what do we got from this perspective? Now we are below these highs here, and we look for trades again. This kind of lines up with our fibs, this 429.50 area. That's exactly what we were just talking about. There's a potential long there to try to get back up into this first area, which is going to be we're already talking about that 432, and that's really, but depending on the market internals, we may only get a lower high to 431, right? If we trade into here, we come up into here, continue the sequence back down. It's a little shallower for me. I don't know if I would take that trade, but coming back to retest these high, I mean, you can't deny that that area is going to be important. It could reject, but if it goes over again, that's the 432, that 432.50. That's the main area I was talking about earlier that I like to short a little bit better. But those are definitely two areas we'll watch out for. So keep in mind that 431. 431.15 zone as well. Ideally, though, that the 429.50, yes, 429.50 to 428.90. Going to want to see those hold ultimately. Otherwise, more downside in the books, in my opinion. Under that 428.90, then we'll be looking for sells down into 427.50 area, 60. Otherwise, and you can see here, at least on the hourly, nice confluence. We were talking about that the bulls would need to recapture again this prior structure. Looks a little different on the hourly, but you can see here kind of a head and shoulders kind of trying to play out here with this neckline, right? And if that is true, the neckline, it would bring us all the way down, at least into this half gap if we measured from this high all the way down to for that move, for that measured move. But look at the nice confluence here and recapturing the hourly 20 if we do start to get over that 432 for that potential short, or for the bull side if we do recapture, and then looking for those moves up into 433, 434, and then potentially up into that 435, which we already spoke about on the fibs. Volume point of control right there, and also potentially setting up for that that hourly or that 4-hour lower high coming in, as we discussed already on the fib chart, like that, right? So let's keep that in mind. And honestly, this scenario, because everyone was probably so bearish coming, VIX is up, all this and that, it wouldn't surprise me to see a stronger move, and then people not realize that this is just the hourly or 4-hour lower high being put in. So let's watch out. But doesn't mean I'm not going to try that 432.50. I probably still will personally probably try that trade. If I get stopped out, whatever, I'll look for the longs and see. But if we do get over that 435 though, 435.70, okay, then we'll try again up into 437, that half gap. Look where we stopped so many times, right at the bond auction. Oh, that is something I did want to mention. You guys will notice this, or you already have, or start to, but we had that bond auction, right? We had a 30-year and a 10-year bond auction, 2 different times. Tuesday, we were rallying up. We had the 10-year, I believe. Boom, right down, right? We had the 2 days later, we had the 30-year right into the same level. Boom. Oftentimes, you'll notice news comes out at very important levels. And here's just no coincidence that right up into that 437, setting us up for really nice shorts at our half gap. Boom, boom, down. And that's literally our half gap of this balance, and that's also literally the halfway point in the daily gap that we were talking about earlier. So, let's see. It'll be hard to really get too bullish unless we get over that 432. Then we can potentially look for those moves, like I said. We got to watch out for these lows. But we get over, we'll be looking for that 435, and then maybe that stronger short. I still will look at a short potentially at 432, 432.40 at that area. And then if we do open up down here in the 429.50 area, I will be looking for potential longs. Again, I don't know if we'll reject there, but I'll certainly be taking some off at that 431 from that move. But if we can get a little bit extra juice back up into here, I'll take it. Maybe flip short there, see what we can get. If we get over, maybe I'll take a hedge at that point. Have most of my position out by here because it is a counter trend trade. And still, from the trend sequence, all these, even up all the way up to 435, like I said, are all just lower highs being put in. Any way you slice it. So keep that in mind. that you're swimming against the current there. But yeah, I think that's all I've got. I want to take a moment before we end, of course, to thank all the listeners and subscribers for joining me on these videos. Really means a lot to me. Your support, the comments, love to hear what you think as well. Down below, we're gonna go up, down, sideways. There's, we were talking about that potential price acceptance mode that we will go into. So be aware of that. We can just trade in this area for a while as well, or even back up in a higher range in this range as well. So keep that in mind. But hopefully this helps. Again, I really appreciate you guys spending the time to prepare. Remember, a prepared trader is a profitable trader. So trade your plan and plan your trades. Let's have a great week, and earnings will be interesting, and I will see you midweek for our next video. If you haven't already subscribed, feel free to do so. Smash that like button, means a lot to me as well. A little thing you can do, brightens up my day, and it is raining here. And make sure you have that notification bell on, right? All right, so that is it for me. Have a great rest of your weekend. Take care, and I will see you later.